Pinterest told investors users were surging. The numbers were manufactured. In the summer of 2023, Pinterest's own internal data showed something its public filings didn't. Monthly active user counts, the single metric Wall Street was pricing the stock on, didn't match what advertising partners were seeing on the back end. The discrepancy wasn't small, and at least one senior executive had seen both sets of numbers. Pinterest launched in 2010 as a digital mood board. By 2022, it had positioned itself as something more valuable, a purchase intent platform. Not just browsing. Intent. The pitch to advertisers was surgical. Pinterest users don't scroll to kill time, they scroll to buy. That framing is what justified the premium ad rates. That framing is what held the stock price up. It was also the foundation everything else was built on. To sell intent, you need users, engaged ones. So Pinterest's most watched number wasn't revenue. It was monthly active users, MAUs. That figure went into every earnings call, every investor presentation, every analyst model on the street. In Q4 2022, Pinterest reported 450 million MAUs. Analysts celebrated. The stock climbed. Advertisers were reporting reach numbers that didn't add up to 450 million. They were reporting something significantly lower. The gap wasn't explained. It wasn't disclosed. It was absorbed into the quarterly narrative and moved past. Here's how the methodology worked, or didn't. Pinterest counted a monthly active user as any account that logged in or was accessed within a 30-day window. That definition is standard. What wasn't standard was what happened on the edges. Dormant accounts reactivated by automated systems. Re-engagement pings sent to lapsed users that registered as activity. Third-party integrations that logged passive touches as active sessions. None of that was explained in the filings. CEO Bill Ready had taken over in June 2022, replacing co-founder Ben Silbermann. Ready came from Google. His mandate was monetization. His language to investors was specific. Pinterest was entering a new chapter of growth, driven by a larger, more engaged user base. He said this while the company was internally reclassifying how engagement was being measured. The timing is not incidental. Wall Street's read on Pinterest going into 2023 was cautiously optimistic. The platform had survived the post-pandemic user decline better than competitors. TikTok was eating social media. Pinterest, analysts argued, was insulated. Its users had purpose. They weren't there for content. They were there for decisions. That thesis depended entirely on the MAU figure being real. It depended on the engagement being genuine. Both were being contested internally. According to the securities fraud complaint, Pinterest executives made materially false statements about user growth and engagement between February 2023 and August 2023, the exact window preceding a significant stock decline. 6 months. Specific statements. Specific dates. That's not vague. That's a pattern. February 9, 2023. Pinterest's Q4 2022 earnings call. Bill Ready told investors the platform was seeing healthy user growth and improving monetization trends. CFO Todd Morgenfeld backed it with the numbers. MAUs up. Revenue per user trending in the right direction. The stock responded. Institutional investors added positions. That call is now exhibit material in the lawsuit. Here's the midpoint. Pinterest's own advertiser-facing tools, the systems brands use to plan and measure campaigns, were showing audience sizes that conflicted with the public MAU count. Some advertisers flagged it. Some adjusted their buys. One large agency reportedly raised the discrepancy directly with a Pinterest sales representative. The response, according to internal communications referenced in the complaint, the question was escalated. It was not answered. It was not disclosed. Behind the filing is the class of retail investors, pension funds, individual shareholders, people who bought Pinterest stock between February and August 2023, based on what the company was saying publicly. Some held through the decline. Some sold at a loss before they understood why the price was falling. They didn't have access to the internal communications. They didn't have access to the advertiser data. They had the press releases. That's it. Between the February earnings call and August 2023, Pinterest stock fell sharply. Shareholders who bought at the February peak and held lost a substantial percentage of their position. The lawsuit alleges that loss was not random market movement. It was the gap between what was said and what was true, finally closing. That gap has a name in securities law. It's called fraud. The legal mechanism here matters. This is a 10b-5 claim, the broadest securities fraud statute in U.S. federal law. To survive a motion to dismiss, plaintiffs must demonstrate a material misrepresentation made with scienter, meaning intent or reckless disregard, that caused a loss. The complaint doesn't just allege bad numbers. It alleges specific executives made specific statements they had reason to know were false. Scienter is the hard part. The complaint argues they already had it. Pinterest's public posture throughout 2023 was confidence, new ad formats, creator partnerships, shopping integrations. The narrative was expansion. Bill Reddy gave interviews describing Pinterest as under-monetized, meaning the real value hadn't been unlocked yet. Under-monetized is a very specific word choice when your core user metric is disputed. It redirects. It implies future upside. It keeps investors oriented toward what's coming, not what's currently broken. Distraction with a roadmap attached. The securities fraud lawsuit was filed in the Southern District of New York. The law firm leading the action is soliciting shareholders who purchased Pinterest stock during the class period to step forward as lead plaintiff. The lead plaintiff deadline is a hard cutoff. Miss it, and your ability to direct the litigation disappears. This is how class actions die quietly. Investors don't know they have standing. The window closes. The company settles for a fraction. Executives face no personal liability. It's happened before, with larger cases than this one. The accusation ladders here is fully constructed. This wasn't a forecasting error. Companies miss projections. This wasn't a metric that turned out to be imperfect. All metrics have limits. The complaint alleges a sequence. Pinterest knew the MAU methodology was producing inflated counts, chose not to disclose the methodology change, made affirmative public statements about user health, and did so during a period when insiders had material non-public information about the actual trajectory. Not a mistake. A known issue. Buried. Acted on anyway. And the stock price held until it didn't. The question no filing answers directly. Who sold before August? SEC Form 4 filings. Mandatory insider transaction disclosures show executive stock activity during the class period. Those are public documents. Researchers have pulled them. The pattern of when certain positions were reduced and what the stock did afterward is something anyone can look at. The lawsuit will look at it too. Pinterest is not a small company. As of mid-2023, its market cap was in the range of $15 to $20 billion. Institutional holders included Vanguard, BlackRock, ARK Invest. These are not unsophisticated actors. They bought the thesis. They held the position. They had analysts building models on the MAU figure. When the number is wrong, the model is wrong. When the model is wrong at scale, the losses are institutional. This isn't a retail investor story. It's a market integrity story. Pinterest still exists. The platform still operates. Bill Reddy is still CEO. The stock recovered partially. The narrative moved on. But the class period is fixed. The statements are on record. The advertiser data still exists somewhere on a server. The only thing that changes now is whether anyone demands it be produced. Fraud doesn't require a confession. It requires a pattern, and this one has a paper trail. This is Redacted Chapter. Subscribe so you don't miss the next one.